Gold versus cash. What's in your pocket? Right now, gold is rocketing and cash is burning. Gold is at an all-time high and it doesn't look to be stopping anytime soon. So as an investor, someone who's more focused on buying gold than selling gold, it's really got me wondering, gold versus cash, what's in your pocket and what's the better situation for your own investment portfolio? Okay, so let's get straight to the point. Right now, gold is massively outperforming cash. There's so many benefits to the wonderful yellow metal. But don't get me wrong, I'm not going to write off cash in this video. So don't start thinking that I'm going to start hating on fiat cash, because that is certainly not the goal behind this episode. Now, I want to talk more specifically about what's in your pocket and gold versus cash. What's the best one to have, and how can we compare the situation between those two different assets, if you want to call them that? Okay, so right now gold is massively high and cash, well, it's cash. We know that it loses out on inflation, and generically cash is historically and always losing value over time. Whereas we know gold is outperforming cash right now. Gold on the year is up 15.7%. That's an increase of £242.45 per ounce. So it's looking very, very nice for the yellow metal. Now, as somebody who's more focused on buying gold than selling it, I am trying to buy at the better times. Now, as someone who I would consider myself a generic weight stacker, now what I mean by that is I'm buying and investing in generic bullion, Britannias, you could say sovereigns, and I'm not really focusing on those limited edition pieces, and especially those series and proof pieces. I'm not interested in paying those higher premiums and the costs that come with buying those collective pieces. I'm really just trying to get the best value for my money when it comes to my investments. And that is generically across the board, whether it's property, index funds, crypto, commodities like precious metals and gold and silver. So I'm really trying to focus on the value. So right now I have to pay really important attention to the fact that gold is increasing. It's telling me that the economic market of the globe is in a little bit of turmoil. Some people think we're in the midst of a recession. I personally don't think that, although I do think inflation is high. There's no denying those figures. The Bank of England's interest rate is still set at 5.25%, so very, very high. Not great if you're looking to take out a loan, maybe a mortgage, but it is good if you're putting your money into a high interest rate ISA, and you can get some really good returns on that. So it's kind of a glass half full, glass half empty kind of mindset. Me as an investor, someone who's trying to build my financial intelligence, I am doing my utmost to look at that from a positive point of view. I'm trying to take out the positives of the high inflation rates right now and the high interest rates. I'm trying to capitalize on those periods of time in the market. Now, as someone who's got a diverse portfolio, being precious metals in that portfolio, even though the market is a little bit unstable and cash is devaluing massively, I can't help but be very satisfied that I have invested in precious metals, specifically gold and silver, because right now it is increasing. Now, what does that do for my gold? Well, of course, it increases the value of my portfolio, doesn't it? And when we're seeing these large increases of gold bullion prices and silver, it makes me happy, because it means I've made the right investment and my investments is paying dividends. Not literally, because we know that gold doesn't pay any interest and it doesn't pay any dividends, at least tangible bullion doesn't. However, I am still a believer in cash and I do hold cash. So why am I so for gold but a little bit more hesitant about cash? Well, I don't really want to lose value. No one wants to lose their value. No one wants to lose money. Let's be honest. Whether you're an investor or you're not even an investor, no one wants to lose value. So for me, I do resent having cash just sitting there. But there's a reason why I do it. I have it because I believe in having a war chest. I like to have money for a so-called rainy day. I often say the saying of Don't live a lifestyle with a champagne lifestyle on a lemonade wage. And that's how I sort of try and treat my own budgeting system. And that also goes to my cash basis as well. And what I'm doing is I'm trying to keep an allocation of cash for a war chest for a rainy day. Let's say if something happens with my properties, my car, I want to be able to have quick access to cash to save me stress and to save me the situation of having to sell some of my bullion, because I really don't want to be doing that, because I don't want to be losing out on the investment that I have put into that particular gold piece. I might be losing some of the premiums that I've paid. You need to hold gold for a long period of time to recoup the money that you've put into it, because initially you do come in at a little bit of a loss because you don't get to buy it for spot price generically. At least I don't when I'm buying direct from bullion dealers. Now, I like to have a bit of cash. I think it's important. I really do. I have a pretty decent amount in cash in my war chest fund, so to speak, but that's there for an investment as well as a rainy day. So it does annoy me a little bit, I have to be honest, that I know that money is losing out to inflation. It's not really gaining me any interest or paying any dividends. I know there's better investments out there. I could get some corporate bonds, or I could put it into some index funds. Maybe that would be a wiser investment, or a suggestion of my time with my money, because I could at least make some interest on that. But for now, I have it locked away and I'm quite happy with that, because I want ease of access, and for me that's important to my own portfolio right now. Having said that, your circumstances may be different. You might not be saving for an investment. You may be completely capped out and investing in the investments of your vehicles in your portfolio that's fitting you. You might not see the need for any cash. So don't get me wrong, just because I've got cash sitting there and it is losing value through inflation, that doesn't mean you do have to do the same thing. Now, there's still lots of benefits to cash. Let's not write it off just because it loses value from inflation. We know that cash is quick. It's extremely recognisable around the globe, specifically here in the UK. Obviously, it's UK sterling. It's very, very recognisable. People want to take cash. It's low profile as well. There is people out there that do take the benefit of cash and avoid taxes. I'm not saying I do by any means, but I'm just using the honest opinion and truth that's out there. Cash is very low profile. It's easy to store as well. It's very flat, it's very light, very easy to store. And you can earn interest and make dividends from your cash. You can invest it into a high rate ISA with your bank account. It's very secure, it's very safe. Yes, it's very boring, but you're going to get some decent interest, especially right now as the interest rates are so high. So although there is quite a big negative of cash being, a losing asset to inflation, there's a lot of positives as well. I know the country, the United Kingdom, is looking at bringing in CBDCs. They were talking about the Bitcoin. A lot of people aren't a fan of this because it creates trackability and traceability, and people don't like that. And I'm too of that mentality. I like, the fact that, for example, you can purchase gold, or you can own cash, and it's low profile. You can move it around. There's not traceability to it, and it's a lot more safe. Whereas CBDCs, the Bitcoin, these sort of online digital currencies, if they were to remove cash, that's going to make a lot of trace and trackability to the owner of that cash, which is definitely a negative in my opinion. So if that does happen, and I think we can't deny the push of the way things are going in the market, I think you'd be quite ignorant to just completely write that off. I think that will make gold even more valuable as an investment, because if you're owning tangible bullion, listen, it's untraceable, it's pretty low risk, and I think that just adds more flowers to the investment portfolio of gold bullion. So for me, gold versus cash, what's in your pocket? Well, I do own a mixture of both. I don't like having cash sitting around, but I do believe I need some for a rainy day, and I need to build it up for my investment purchases. Yes, I could sell some of my investments, maybe my index funds, even some bullion, but that doesn't fit my strategy for my investment plan and my investment portfolio. But that's not to say that would work for you or it wouldn't work for you. Let me know what you think about cash versus gold and the situation with it losing value to gold and the interest rates where you can actually make money on your cash as well. There's definitely a lot of positives to gold, and I actually still think there's a lot of positives to cash. So don't write off cash just yet. Have a look at the positives, and I think there's a mixture between having both is quite nice. So thank you very much for watching this episode. I've really enjoyed filming it. I appreciate your time, and I look forward to seeing you all in the very next episode.